So in exercise 5.2, we know we've got a CC. So if it's a CC, just to recap one or two things, is it a separate legal entity?
Yes.
Yes. So do you account for the business as a separate entity compared to the members?
Yes.
Definitely. Will you show a member's salary on the books of the CC?
Yes.
Yes, you will. Right, you treat them as normal employees because it's a separate entity.
Okay.
All right, so let's see how the adjustments went. Let's look at the first one. If we go down to the bottom here, point number 1 talks about inventory at 31st December 2015 amounting to 42. What are your thoughts about that? What
Well, when I
comes to
looked at
mind?
it, I thought the assets are going to increase because I looked at the number and the number was, let me just see it quickly. The number was 30,000. But
Okay,
then
but that inventory that you saw in the trial balance was for what date?
was the opening balance.
Correct. And last time we spoke about the system that's being used. What system is being used?
Periodic.
Periodic. Good. So there's a calculation for cost of sales, right?
Yes, that's correct.
Okay, so when you see adjustment number 1, this is a cost of sales calculation and closing stock disclosure.
Okay.
So the easy mark is to show it on the statement of financial position. Earlier we spoke about it. We said inventory is going to be recorded here, but not the opening stock, the closing stock.
Okay.
And the closing stock we
Yes,
now know is 42,000.
Yes.
So 42,000 will be recorded there. Easy mark.
Okay.
Always put closing stock on the statement of financial position for a periodic system.
Okay.
We still need to look at the calculation. Okay, so we started with this. We're going to include an amount here of 42,000 as part of the closing stock for the cost of sale calculation. Later on, I'll tally up and I'll put the final figure there. For now, I've captured it twice. Once here for cost of sales and once in the statement of financial position.
Excellent.
Number 2, what stands out here?
Number 2, the additional amount of 2,000 must be written off as irrecoverable. The allowances for credit losses must be adjusted to 1650.
Okay, so do we have 1 or 2 transactions here?
It's 2.
It's 2, good. So keep them separate. Don't try to do both at the same time. Do one at a time. So let's focus on the first bit. How are we going to process this?
I said we're going to debit the credit losses and credit the debtors.
Perfect, that's correct. Good, so just to write that adjustment down. Number 2, debit the credit losses, credit the debtors, 100%. Now you know what the accounts are going to be affected in terms of this being an expense going up and this being an asset going down. If you know it's an expense, you know it's disclosed here, comprehensive income, and if you know that's an asset, you know it's disclosed there, financial position. See how important the working is? The working tells you where to put everything as well.
Exactly.
Okay, so let's take the 2,000 and let's get the mark. So if I go back to my, it was 2,000, that's fine. So if we go back to this, credit losses here was 800, which is what we had on the statement. I'm going to show a +2 there in the comprehensive income. And then in the financial position, against my trade receivables, I'm going to show a -2,000.
Right.
Next, what does the second part tell us about?
Sorry, just go back quickly. So the current trade receivables is -2,000.
Correct.
On your financial position.
That's
and
right.
When you report, and the other side is
credit losses in the statement of comprehensive income.
Oh, there, +2,000, of course. Okay.
Okay, because you had the working, you had debit and credit, eh? Debit the credit loss, which is this. There's the debit credit loss.
Yep.
And there's the credit debtors.
Yes, okay.
Okay, what did the second part tell you about?
Okay, the second one says the allowance for credit losses must be adjusted to 1650.
Okay, what is the current allowance?
Current allowance is 800.
No.
Credit losses, yes.
Current allowance for credit losses.
Oh, allowance for credit losses, so there's 1,500.
Okay, that's the figure you need to look at, not the credit losses. The credit losses is the expense. The allowance is the negative asset.
Yes.
So how do I increase a negative asset then?
To increase a negative asset, you need to credit it.
Yes, good. All right, so credit allowance for credit losses, negative asset increasing. And what am I going to debit?
Credit. So let me just think about it. So your credit losses goes up actually by 150.
Correct, credit losses.
Yeah, so...
Good. There you go, you've got it. So there's your working. Debit that, credit that. Again, identify what the disclosure is. So there's the disclosure. Statement of comprehensive income for the expense, and then financial position for the negative asset.
Sorry, let me just make a note here.
Remember, I'm increasing the allowance, so I have to credit it.
Okay.
How much am I going to increase it by?
150.
150, good. So let's put that in our statements to get the mark. Trade receivables, there's it. So now I'm going to take that amount, okay, and I'm going to have to add 150 to the 1,500 because now I've adjusted the allowance.
Yep. Okay.
And I need to process this 150 as part of the credit losses.
You plus it there, of course you plus it there as well, yeah. Yes.
Because it's a debit.
Okay, perfect.
Okay, next, number 3.
Number 3 says the land and buildings. I don't think we need to do anything there.
100%, well done. Okay, so number 3 is just additional information. It's nice to know what actually happened in the past. As long as the books are correctly showing the land and buildings at 560, we're happy with this.
Okay, perfect.
What is the land and buildings currently?
560.
560. So you don't have to do anything. Okay, this is additional information that you could put in an accounting policy. Okay, you'll see when you look at the actual solution that UNISA has given you in their study guide, they give you a lot of notes. Let me show that to you quickly now while we're discussing it.
Okay.
The notes start over there. There's the notes. Okay, the notes to the financial statements. Okay, so you have things like this: basis of preparation, summary of the policies, property, plant, and equipment. Okay, you're not going to need those notes for this particular module. It's covered in more detail in later modules when you actually have to buy and study the IFRS, the rules. And then it becomes more challenging because then they do require the very specific disclosure in terms of the notes. For now, they're focusing mainly on the accounting, okay, the debits and the credits, and they're not so, let's say, strict in terms of these notes because these notes focus a lot on the actual rules, the IFRS. And you haven't got the IFRS. You haven't been asked to purchase it. All you've been asked to buy is a textbook, which gives you some additional theory and information. They do ask for some of the notes, but the notes that they ask for are notes that you've done before. Okay, this is a possibility. That's the note that they could ask you for in terms of depreciation, PPE.
Yes. I remember that.
Yeah, they normally do. Sometimes they do test it, sometimes they don't. It just depends on the examiner. And then sometimes I've also seen this come up like once or twice where they've asked you for a more detailed note on the actual financial assets. So financial assets are things like shares, buying debentures or bonds, those types of things. And then they ask for more disclosure, which is simple because you literally rewrite what the question tells you. Okay, so a note is just what? Additional information. That's all it is.
Okay, perfect.
Okay, so let's go back to the question that we were busy looking at, and we were discussing number 3, which you told me isn't important because it's additional information. Number 4.
Number 4 talks about depreciation. which must be provided for as follows. So vehicles, 20% per annum according to the diminishing balance method.
Okay, so give me the working for depreciation. What do I do when I see depreciation?
Timeline.
Yes, very good.
Yeah. So I said vehicles in the beginning was 200,000.
Okay.
But what I wasn't sure about, Anthony, and like I said, I should have, taken more time to look at this, and I really didn't. So I'm being honest with you.
It's fine.
So all I did was deducted that 12,000 accumulated depreciation because that was the opening balance.
Okay, yeah. So it's good that you're drawing a timeline. That's important. Okay, so we know the start of the year is 1st of Jan, right?
Yes.
It's Jan to December.
Yes.
Okay, this was 2015, if I'm not mistaken.
Correct, yeah.
Okay, and then 2015 here. Okay, so that's important. So you've got the right technique. Just draw a little timeline. Okay, and then you can plot everything on the timeline if you need to. Don't forget that this is key, the debit and credit. You need to understand what's happening. So obviously this is an expense. And where do we put expenses?
It's on the debit side.
Comprehensive income on the debit side, yes. Okay, disclosure, hey? Where do we put negative assets?
On the statement of financial position.
Good. See, now you know where to put it. Everything in this module is disclosure. They want to know where you're going to be putting all of these different amounts. So as long as you're comfortable getting that, doing the working shouldn't be so bad. So if I do the working, let's go back to the question. You'll see they've given you diminishing balance and straight line. So obviously equipment is easier to account for, right?
Yes.
So we can start with it. We don't have to do the difficult one first. As long as we cover both, it's fine. So I'm going to start with the equipment because it's 10% on costs. What is the cost for the equipment?
Equipment cost was 40,000.
Okay, so all we need to do is where equipment was, there's it. I'm going to add 40,000 times 10%. I hope it was 10%. Let's just double check. Is it? Yes, it was. Okay, yeah, it's 10 and 20%. Okay. All right, so that's fine. Plus 40 times 10% against your equipment. Not plus, minus. Okay, it's subtraction. Okay, that's your depreciation. Where else do you put depreciation? In the statement of comprehensive income.
Yep.
So depreciation, open brackets, 40 times 10% is 4,000. So we'll leave it as 4.
Okay.
Okay, now we need to look at the diminishing balance. So this requires the opening and closing balances. Okay. You need to look at carrying value. So you're right here in terms of looking at the cost, which was 200. And then you're right by taking off the accumulated. Of 72. That's correct. Okay, so go to your statement of financial position. Vehicles is going to be, in terms of depreciation, let's write it down here. Depreciation equals brackets 200 minus 72 close brackets times 20%. Gives you 25,600. Okay, so that's going to be depreciation that you're going to subtract from your vehicles.
Of course, that makes sense. Okay. Okay, so then we go to.
Right, so we had the working earlier. Just to go back to the adjustment, there's the adjustment. We spoke about it. Have I captured the financial position disclosure? Yes. There's the financial position. There's the disclosure. I've done the first half. I still need to put this 25,600 where?
On a statement of comprehensive income.
Exactly. Plus 25,600.
25,600. Okay.
And now you've completed that one.
Yep.
Next.
Next one is number 5. It says on the 31st of December, so that's the end of the year, a trade debtor who owes 1,600 will be entitled to 10% discount if he settles his account before the 15th of January 2022. So he's got like 7 years to settle his account.
Yeah.
The bookkeeper recorded the sale transaction correctly, but forgot to account for the allowance for settlement discount granted.
Okay. All right. So do you agree this is a new working? This working is focusing on what? An allowance for something else.
Yes.
Okay. So this is new. Okay. So if you couldn't do this one, don't worry. Okay. Don't stress. It's something that's different, but very similar to what we had before. Okay. Who are you dealing with here?
With a debtor.
A debtor. Good. Do you agree a debtor can be given a discount?
Yep.
So if you give the debtor a discount, what account do you create? Discount allowed or discount granted. What is that viewed as?
I suppose it's a liability or an expense.
It's an expense because you lose some of the benefits.
That's exactly what I said. I said you're going to debit the expense account because it's the discount that you've granted. Yeah.
Good. There you go. So you had the first bit. The second bit was the tough bit because this is an allowance for a settlement discount granted or allowed.
Okay.
Okay, so now you have another account which we need to highlight, which is the same or similar to this one, the allowance for credit losses. Because who do those accounts affect? The debtors.
Debtors, yes.
Okay, so what you're saying, so what the question is saying is you've got a debtor of 1,500. Are you going to get all of it in the future?
Yes.
No, you won't because you're going to give a discount.
Oh, you're not. So you're not going to get.
I'm not going to get all of it because part of it is a discount.
Yes, you're right. Okay.
So can I show all of it?
No.
No, I should show it at less the discount.
Oh, perfect.
You see, that's why you're taking it off because you know you're not going to get it because they're going to use the discount. So comprehensive income for that, financial position for that.
Okay.
Okay, how much was the discount?
10%.
10% of 1,500.
1,600.
1,600. Okay, so let's put that in to our disclosure. So minus 1,600 times 10% is 160, right?
Yep.
Okay, there's something new that we need to highlight.
Okay.
That's a new account. It's similar to an allowance for credit losses.
Okay.
And where else do we put that? We put that here. It's a discount that we're allowing. So I'm going to show it here as a separate line item.
Okay.
Sometimes they take it off the sales. It just depends. Okay. I've seen you need to sometimes take out the discount from the sales. If you do that, then you just need to identify it as being the discount that you're removing. Okay, because obviously debtors would have bought on credit, so they would have been part of your sales.
Okay.
I prefer to show it separately, okay, because at least then you've got it and they can see it, and it's 10% of the 1,600, which was the 160. We don't actually have to put a working there. We can just show the total, 160.
Okay. Right.
Number 6.
Number 6 says provision still has to be made for interest on the fixed deposit of 14% per annum receivable on the 1st of January of each year. The fixed deposit was made on the 1st of January in 2015, so the beginning of the year, at Fairbank for a period of 3 years.
Right, good. Thoughts?
So it's money we've invested in the bank and we're going to get 14% interest on it.
Good.
So we're
Have
going to be
you got
debiting
the interest?
Well, we should.
Are you going to get the interest?
Yes.
So what is it viewed as?
As an asset.
Yes. What's the asset called?
Interest.
No.
On fixed deposit.
What's the asset called?
Bank.
No, bank's not being affected here. You're not getting the interest.
Okay.
When is it receivable? On the 1st of every year.
Yeah.
So do you agree this year we would have earned interest, but we're only going to get it one day after year end?
Yes, so we're going to get it 1st Jan 2016.
Yes. So must it still be recorded during the year?
No.
Yes, because of the It was earned during the year. You earned the interest during the year.
Okay.
So what do you call something that you've earned that you haven't received?
Well, if you've earned it, must be an income.
Okay,
But
so
you
you've got
haven't-
the income part. Interest
Yeah.
on fixed deposit. Let's put that in.
Okay.
Okay, so that's what you're discussing now. Income. Perfect. Increase. Okay, I want the debit. What do we call the debit?
See.
It's an adjustment.
Yeah.
Something that you've earned that you haven't received is called?
Yeah, not sure. I can't remember.
Accrued interest income. It's accrued income.
Okay.
Accrued income is income that you haven't received, but you've earned it.
Yeah.
Okay, so financial position there, comprehensive income there, and there's your adjustments.
Okay.
Alright, so let's get the marks. Financial position. Okay, we first need to work it out. So what was the fixed deposit? How much was it?
I did work it out. I think it worked out to 11,200.
Okay, so it was 80,000 times
Yeah,
what is
fixed-
the percentage?
14%.
14%, yes. Okay, so 14% gives us, I think you're right, 11, let's check, 80,000 times 14%. Yeah, 11,200 is correct. Okay, so you had the right figure. We need to disclose it to get the mark. Okay, so financial position, comprehensive income. Let's go to financial position,
Okay.
fixed deposit. This is an accrual, so it's a current asset.
Okay.
Accrued interest income on fixed deposit. 11,200. Is that alright?
Yep.
Okay, and then where else must we show this? It's income, so
So comprehensive income, statement of
Yes.
comprehensive income.
good.
Other income.
Correct. There we go. That's the simple one. That's the easy one.
Okay.
Correct. Nice. Next.
We'll just write it down here. Okay. Okay, next says, during the financial year, an amount of 15,000 was paid to member N as remuneration for specialized services rendered to the operation, to the corporation. So that's a salary that was paid.
Yes.
So I said, you debit salaries as because it's an expense, while you debit expenses.
Hold on. You didn't read the last part. Is this included or not?
It says amount was included in salaries and wages.
Okay, so have you captured the amount?
So it was captured already
It was captured, but where was it captured?
under salaries and wages.
Okay, should the member's salary be disclosed as part of all the other salaries and wages?
No.
No, they're special. So see, that's an easy mark. Number 7 is easy because it's just disclosure.
Okay.
Okay, so number 7 in terms of working, easy disclosure mark or marks. Right,
Okay.
I need to just take it away from where? Here. Okay, how much was the salary?
15,000.
15. So minus 15 there. Take it away from salaries and wages and show it separately because it's a special individual. Salary to member note. 15. And there's your marks.
So you take it away on top and you just show it at the bottom.
Correct. You need to show it separately because that's a special employee.
Perfect. That's easy.
It is easy. Good. Next.
Okay. Next, number 8. Interest on the mortgage from Citibank at 12% per annum must still be taken into account. The interest is payable on the 2nd of Jan, so it's in the new year.
Good. That's important. Good. See, you're thinking about dates. That's great.
The loan was obtained on the 2nd of Jan 2013 and is secured by a mortgage over land and buildings. The loan is repayable on the 22nd. In 2 Jan 2022.
So, what are we going to do?
Okay.
Give me the working. Debit and credit what?
I said we're going to credit the liability and we're going to debit the assets.
Yes, but now no, not the assets. You debit the expense.
Okay.
Interest on, what was this? Was this a mortgage or what?
Yeah.
It was, hey, a mortgage.
Mortgage, yeah.
Okay, just to double check. Okay, so interest on mortgage is the debit and credit the liability. What's the liability called? Something that you haven't paid yet.
Yeah, it's interest on the mortgage. So that,
Accrued.
that is the
Interest expense. An accrued interest expense account is a liability account.
Okay.
Okay, so financial position for that, comprehensive income for that. There's your working. We need the amount though. How much interest is going to be charged?
12% per annum.
Okay, 12% of what?
The mortgage is 320,000.
Okay, great. So 320 there equals 320 times 0.12 gives me 38400. So there's the working. There's your analysis. Now we just need to disclose. Get the mark for the disclosure. See, the workings are important. Okay, this was number 8, eh?
Yep.
Alright, so that's number 8. Okay, 7 was just disclosure. Okay, comprehensive income.
Yeah, that's an expense, yeah.
$38,400. Where else do we put it?
38,400. We put it on the statement of financial position under current liabilities.
Good. And we write down accrued interest expense because that's the actual account name for the liability. Okay, so current liabilities, accrued interest expense, 38,400. Does that make sense?
Yep.
Great. Next.
The loan to member end note was granted on the 1st of April 2013. Interest is calculated at 12% per annum and has to be paid by the member in January. The loan is unsecured and immediately callable. But I don't know what callable is.
Okay, callable. Callable means that it can be redeemed by the party. So meaning it will be paid back. So it can be paid back in any time.
Oh, okay.
Okay, that's callable, yeah.
Callable, okay, all right. Okay, so number 9, I think it's a drawing.
No.
Not.
Keep it simple. What words stand out?
Loan.
Loan to member. What is a loan to member account?
Loan to member.
Which element?
An asset.
Yes, why?
Because it's money that's going to still stay in the business.
Okay, because the CC gave the loan to the member, right?
Yes, okay.
Okay, so if the CC gives the loan to the member's owing the CC. Whose perspective do we always look at?
I beg your pardon, whose?
Whose perspective do we always look at?
The CC's perspective.
Always, correct.
Okay. Okay.
So what's the asset going to be called? Loan to? Loan to member is an asset. Assets generate?
Income.
Income, yes. So this interest that you're going to be calculating is for a loan to a member, which is what type of account then?
Asset.
No, the interest on the asset. Interest on an asset is a?
Income.
Yes. Interest on loan to member. Who are we dealing with here? Member who?
Note.
Note. Okay, that's it. Note. 12%.
Yeah.
All right. What was member note's loan?
Just want to make a note here, sorry. Member's note loan was 40,000.
40,000. Great. So 40,000 times 12%.
Yeah.
Is 4,800.
Yep.
If this, okay, let me ask you this. Has the interest been received?
No.
So what do we call interest that has been earned but hasn't been received?
Accrued.
Yes, accrued interest income. Good. Accrued interest income. Okay, on the loan to the member.
Okay.
Right, so financial position here, comprehensive income there. Okay, let's do the comprehensive income first. 4,800 interest on loan.
$4,800.
Yeah, 4,800 was the interest on the loan, yes.
Okay.
Okay,
and under non-current assets.
No, not non-current, under current, because it's short term.
Yeah, sorry.
Okay, accrued interest income on loan to member. Note.
So you can't add a day to loan to member note. That's 40,000.
You can. Okay, you can add them together if you want to. Then you'll have to put accrued income, and then in brackets, then you have to show all the workings.
Okay.
Okay, I prefer showing it separately because at least then they can see every line item, and they know what each line item is for.
Okay, perfect.
Okay, next.
Next says on the 1st of July 2015, so that's like half year.
Yes, that's important.
An amount of 60,000 was borrowed from member B book. So now we've borrowed money from a member.
Correct. So what is a loan from a member?
Yeah.
What is a loan from a member?
Loan from a member is a liability.
Good. See, there you go. You got it. Okay, so number 10. All right. It was what? 1st of July. 1st or 31st?
1st of July.
1st. Okay, great. So the 1st of July 2015. How much did we borrow?
We borrowed 60,000 rand.
Okay, 60,000 from member book.
Yeah.
Okay, keep reading.
The first repayment of 20,000 will be made on the 30th of June 2016 and the remainder on June 30th, 2019.
Okay, so 30 June 2016, how much are we going to pay?
We're going to pay 20,000.
Okay, 20,000. And the rest after that, right?
Yeah, only in 2019.
Okay, so what's long term, what's short term?
Well, that 20,000 is long term as well.
No, it's within 12 months because where are we? We're at the end of the year.
Okay.
Okay, at year end, this is where we are at year end, right?
Yeah.
So at year end, in the next 12 months, I'm going to pay 20, long term or short term?
Short term.
Short term. And the rest after?
Long term.
Afterwards, okay, after the 12 months. So going back to our disclosure, let's get the mark for the disclosure.
Okay.
Financial position, where's the 60,000? There's the 60,000. Okay, so how much must be current?
20,000.
Yes, so I need to remove 40.
Okay.
Okay, and then I'll have a long.
So where do you put that now?
Non-current. Long term is non-current, short term is current.
Because I just want to see. So total liabilities. Oh, here we go. Here at the bottom. Okay. So that's minus 40. Yeah. So you've recorded it there, and then you've recorded it as a non-current liability.
Current and non-current. A portion is long-term, a portion is short-term.
Okay.
Is there interest on this loan?
Yes.
How much?
10%.
10%. Okay, so when did we take out the loan?
Half year.
Yes, that's important, right? So how do I work out interest for that period?
So let's make a note here, long-term portion of loan from member. And that was 40,000 as well.
Yeah, the long-term portion was 40. because that was the amount that was after 12 months.
Okay. All right. Okay, sorry, let's go back. So how do you calculate the interest? So it will be, yeah, so it will be 60,000 because that's the amount, times 10% times 6/12.
Correct. Times 10% divided by 2, 6/12, 3,000. Okay, what is that interest? Have you received it or have you paid it? What is it?
You have to pay it.
You have to pay it, right? Because it's a loan from. Or a loan to.
That's a loan from.
Correct. So debit the interest.
Okay.
Expense. Credit the
accrued interest.
accrued interest expense.
Okay.
Right, so financial position for this, comprehensive income for that.
Okay.
Okay, so let's record 3,000 in the financial position as an accrued
interest expense.
Yeah, accrued interest expense. Again, you can group them if you want to. I'm keeping it separate. 3,000 for the interest, right?
Yep.
Okay, and then there's the financial position. I still need the comprehensive income.
Yep. So then we go to comprehensive income. Yeah. And that's going to be an expense.
Correct. 3,000.
Okay, perfect.
Next.
Next is provision must be made for a distribution of 80% of the total comprehensive income for the financial year to the members.
Okay, so that's new. We spoke about a distribution last time. A distribution is similar to what account?
To capital
drawings.
Drawings, of course. Drawings.
Okay, we just call it something different when we deal with the CC.
Yes, yes, yes.
Can I distribute profit if I don't know what the profit is?
No.
No, so you first need to do 12.
Well, we need to calculate that first.
Okay, you need to first work it out correct. So 11 you can highlight because we need to come back to it. But we've covered all of it. We just need we need to look at the last one. What is this here? The 79,515.
So let's just see the actual normal income tax for the financial year amounted to and must still be recorded. So that's we record there at the bottom.
Good, as tax. 79,515, good.
Yeah. So we recorded on the statement of comprehensive income.
$79,515.
Yeah.
Okay. Do I need to provide for a difference? Yes. The difference is the SARS tax liability. Have you paid all the tax? No, you haven't. Okay, so 79,515 minus what we had earlier, 52,000.
Yeah.
Gives me brackets plus 27,515.
Okay.
What is that? That's a liability. That's an amount that's owing.
Yep.
Okay, so the working for this would have been debit the tax, credit the
expense.
SARS liability.
Liabilities. Okay. So that's a current liability.
Yes. Okay, so the tax expense, we've captured it. There's it there. Statement of comprehensive income, statement of financial position. Okay, so in the financial position, current liability, 27,515. Okay with that?
Perfect.
Great. Now all we need to do now is just total up. Right, because we looked at the entire question. So now we just need to total up, work out the profit, and then distribute 80% of it.
Okay, perfect. Okay.
Okay, so the sales didn't change. I'm going to write that amount here. Okay, now I can work out cost of sales. So cost of sales is opening stock plus purchases minus no returns plus carriage and purchases less closing stock gives me that answer.
4,500.
Okay, how do I get gross profit? Well, it's the sales minus the cost of sales. Other income, sum up. Okay, expenses, there's a lot here. Okay, so this one we need to total.
Okay.
16 didn't change. 2982 40000 44. Okay, this one we need to add up.
2,951.
This one I need to add up.
2,960.
Okay, then I need to add up all of them, all the expenses, all of that.
Yeah.
And I get that answer there. Okay, so now I need to tally up to get the profit before tax. So, gross profit plus other income minus other expenses will give me profit before tax.
Yep.
And I get that.
7,190.
Okay, then minus the tax gives me 194675, which is attributable to who?
Well, that's the profit for the year. So
Correct, the members.
Yes.
SOCI disclosure.
Okay.
Okay, remember this is a carry-through mark. So if you make a mistake somewhere in the question and you don't get the right answer here at the bottom, still reference the amount correctly in your statement of comprehensive changes in equity. Okay, because you get marks for doing that. So I'm going to take that figure and I'm going to take it through to my SOCI. Here's my SOCI. There's my retained earnings. So, profit for the year. Right, equals the amount that I had there, 194675.
194675. 194675. That is profit for the year.
Yes. And what did they say in point number 11?
We have to distribute 80% of that.
Good. So, distribution to members minus 80% of it, minus that times 0.8. Okay, that's the amount that I distribute. Who does it go to? It goes to the members. Okay, so that creates a loan account, which I'm going to call distribution to members. Okay, and that will be that amount there. Okay, so now you've distributed 80%.
Okay.
Right, now let's tally up this. Did we see any changes in the balances? No, so the balances we had at the end are the same as the balances we had at the beginning. Right, sum up this, add and subtract. Retained earnings gives me a figure of 56935. Okay, no distribution at the beginning of the year, distribution during the year, total there would be 155740.
Okay.
Okay, now we need to disclose this. Where do these amounts go?
Statement of financial position.
Correct, yes, because remember you disclosed the equity. Okay, so members' contribution book, you've got this plus that. So let's go to the financial position. Okay, members' contribution. Okay, what is that going to be? It's going to be equal to, go to the SOCI, it's this amount plus that amount. Members' contribution note plus book.
Okay. That's 200,000.
Yes. Right. What else do we have in the SOCI? We've got retained earnings.
Yep.
Retained earnings equals that figure. There's it. No, there's it.
56. Okay. Retained earnings. What was that total at retained earnings?
56935.
And it's under equity. Okay.
Under equity, yeah, it's equity. We remember we saw those new accounts. We know they're equity.
Yeah.
Okay, next. Loan to member note 40. Have we got the loan to member note? Loan to members are assets. Do we have that? Yes, we do. There's loan to member note 40.
Yeah.
Okay, so we've got it. We don't have to put it in again. Go back.
Yeah.
Loan from book 60. Did we have that? Yes, we did. There's the 40. There's the 20. There's the 60.
Yeah.
Okay, go back to the SOCI. Did we have the distribution to members? No, we didn't. Okay, so distribution to members is an amount that's payable. It's outstanding.
Okay, so it's a liability.
Where's the amount? There's the amount. 15740. Okay, that's something that we need to reference. Alright, so now you've completed the SOCI and you've posted everything through. All you need to do now is tally up. Okay, so let's total up all of this stuff. Sum up my non-current liabilities. Okay, and my current liabilities.
Non-current liabilities is 360. What is your current liabilities? 292,655. 292,655.
Okay, so my total liabilities would be what? The sum of the two.
Yep.
Non-current plus current.
Yeah.
Okay, so now I've got total liabilities. I also need equity. Sum up equity. I get that. Okay, so equity plus liabilities gives me total equity and liabilities.
Total equity. Total equity and liabilities 909,590. Okay.
Still with me? Is that okay?
Yeah, 100%.
Great. Okay, so now we've looked at equity and liabilities. Let's hope that the assets also add up to that 909,590. Let's check. Okay, so nothing happened here. Okay, there was a working there that I need to work out.
Okay. So 24,000 equipment. Okay. Vehicles 102,400.
Okay, sum up your non-current assets, and then we need to total up our current assets.
Okay. Is that 31,190?
Okay, so now I've got this.
14,000. 143,190.
If I add up non-current and current, let's hope we get the same figure. If not, then we need to check where we made a mistake. Is that the same? 909,590, 909,590. Okay, good. So it's fine.
Perfect.